Welcome back to Teshkid FX for another AGIX price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the AGIX chart, which at the time of this recording is holding below the 20-day MA here on the 4-hour chart, which is now acting as resistance. We have also lost a key area of support at around the $0.34868 mark, in a move that has also continued to obey the Elliot structures, where I still believe that whatever we are seeing is a corrective structure to the lower side in the formation of these higher Elliot count 2, where we have almost fully maximized our minimum target areas in the formation of that wave 2, which lies between the $0.3568 mark and the $0.27947 mark. And before I get further into the technical analysis and also give you my breakdown targets here on the AGIX chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to first give you a recap of what has been happening, where you can see that after making our lower low down there, we started this massive bounce to the upper side, obeying the Elliot structures, where you can see that we saw this 1-2 setup to the upper side, and after seeing the 1-2 setup, we started another 1-2 setup to the upper side, where you can see that I have this Elliot structure in yellow, having that as the first wave, giving us a peak at around the $0.67 mark. And after seeing the high for that higher Elliot wave count 1, whatever we expected next was a corrective structure to the lower side in the formation of a larger Elliot wave count 2, and I believe that is what we have been seeing here on the AGIX chart in the breakdowns that we have been seeing recently, and sketching out a target area to the lower side in the formation of these higher Elliot wave count 2 by connecting the Fibonacci's from the low of the first wave down there to the high of that wave 1. I was able to come up with a minimum retracement area to the lower side in the formation of that higher Elliot wave count 2 between the fib level 0.5 and the fib level 0.618, which is a target area that lies between the $0.35223 mark and the $0.27787 mark, and it is within this blue target area down here that I'm expecting to see the low for that second wave to the lower side. And since we have managed to get into that target area, there are chances that we might have now seen the low for that higher Elliot wave count 2, and there are chances that AGIX might continue gearing up, see a break above the 20-day MA here on the 4-hour chart, have the support that we need for us to continue gearing up, and also manage to break above our key area of resistance at around the $0.34658 mark. And in case such a move plays out, then I'll be watching these other highs that we have over here, because a break above them will be enough confirmation that whatever we are seeing is the start of an impulsive wave to the upper side in the formation of these higher Elliot wave count 3 that we expect after seeing the formation of a larger Elliot wave count 2. And if that is the case, and assuming that AGIX is not going to give us one more leg down to the lower side in the formation of these higher Elliot wave count 2, we can sketch out a target area to the upper side in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave down there to the high of that wave 1, then dragging the fibs to the low that we have here on the charts in the formation of that wave 2, and that gives me a minimum target area to the upper side in the formation of that wave 3 at the fib level 1.618, and that is at around the $1.34988 mark, and that is the minimum that we can expect AGIX to do in the formation of that larger Elliot wave count 3. But in case we continue holding below the 20-day MA and also below our key area of support, that is our key area of resistance at around the $0.34 mark, then there are chances that AGIX might continue seeing the breakdown to the lower side. And in case the breakdown continues, then I'll be watching our next key area on the Fibonacci's, which is the fib level 0.618, which perfectly lies at around the $0.27787 mark. And in case the breakdown continues and we lose that key area of support over here, then there are chances that AGIX might continue seeing the breakdown to the lower side to our next key area on the Fibonacci's, which is the fib level 0.78, which perfectly lies at around the $0.172 mark. And note that this is still a minimum retracement area to the lower side in the formation of that higher Elliot wave count 2. So in case we see a retracement back to the fib level 0.78, that is still a valid second wave to the lower side. And in case such a move happens, then I think that would be another perfect entry to get back into AGX, so that we can be able to ride that massive bounce to the upper side in the formation of that higher Elliot wave count 3 to the upper side, and also be able to sketch out new target areas to the upper side in the formation of that wave 3. So the fib level 0.78, which perfectly lies at around the $0.172 mark, is my next breakdown target in case we continue seeing the breakdown and also lose the fib level 0.618 here on the AGX chart. But also have in mind that we might have seen the low for that second wave to the lower side, and there are chances that soon we are going to start gearing up, see a break above the 20-day MA and also above our next key area of resistance at around the $0.34 mark, continue gearing up in the formation of that higher Elliot wave count 3, and also taking a look at the indicators to see what movements will be supported on the RSI. On the RSI, we are trading at around the 30 mark, meaning we have massive room for us to fully support higher prices in the formation of that wave 3, but in case the breakdown continues, that movement will still be supported on the RSI. Also taking a look at the MACD, we have been able to print a bearish cross, but you are seeing a bit of a sharp decrease in the selling momentum, suggesting that there are chances that we might be able to print a bullish cross to fully support higher prices in the formation of that wave 3. So let's be patient and see how that plays out, and I'll be keeping you updated.